Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened to markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners again jumping on the call. So we saw U.S. equity indices post a strong May return, but some gains were pretty modest last week. So we saw the S&P, the Nasdaq, and the Russell 2000, that small cap area, up about 2% or just a little less than that. So we saw 10 of the 11 S&P sectors in the positive area. The leaders, well, that was real estate, that was healthcare, the laggards, energy. That was due to some falling crude oil prices and some OPEC plus production concerns. Now, commodities, we saw gold fall about 1%, where Bitcoin dropped about 3%. U.S. Treasury yields, they declined amid some tariff-related some continued concerns. If we look at trade and those tariff developments, we saw the U.S. Trade Court block the 2025 tariffs, excluding some sector-specific ones, but then again come back and the Federal Appeals Court paused that ruling for government review. Now, the White House still accused China of violating some recent tariff agreements, but Treasury Secretary Bessent said that trade talks were a bit stalled at this time. Some economic data, we saw consumer confidence surge at 98.0. That was up 12 points. We look at consumer sentiment, that rose to 52.2, up from 50.8. And inflation expectations, they eased a little bit. So we saw the PCE inflation headline, that was about 2.1% year over year. And the core PCE, that was 2.5 year over year. Both were in line with some forecasts. Now, the Q1 GDP, we come out with revisions from time to time. We had the second one come out, and that was slightly smaller contraction. That was came down about 0.2%, and goods trade deficit that did narrow in April. Now, the Federal Reserve, and we looked at the FOMC minutes, they revealed some concerns about some difficult trade-offs in terms of their statement. They were saying, what if inflation maybe stays stubbornly high and employment increases? That came together, causing some difficult trade-offs. We look at corporate highlights. We saw NVIDIA surge about 9% after pulling back a little bit after some strong Q1 earnings. And the AI investment remained strong, really the tailwind for the growth sector, the growth stocks. Now, international markets, we saw Japan may reduce some issuance of super long bonds due to some rising yields. If we looked at Germany, their CPI was pretty steady at 2.1% year over year. Consumer sentiment rose for the third month, and the ECB president, Laggard, a U.S. policy volatility could boost some Euro global role, but only with structural reform. That was some statements from the ECB president. Now, this week ahead, we're looking at some U.S. economic data that's going to be primarily in focus. We'll be looking at the May non-farm payroll that's due out on Friday, with some investors watching some job growth trends, some revisions from some previous months' numbers that came out. Jobless claims look to rise to about 240,000 off of last week. And other key U.S. data, we'll be looking at the ISM manufacturing PMI, ISM service PMI, some factory orders, revisions to productivity, consumer credit numbers. And then we'll get Fed Chairman Powell to speak at the Washington conference. That'll be coming out at the beginning of the week. Then international, we'll be looking at the Eurozone consumer inflation data will be coming out Tuesday. OPEC meeting will be held on Saturday, and China's PMI will be released, rounding out some activity on the global calendar. But I think we'll be looking at some central bank activity with Europe and the Bank of Canada. Canada is probably expected to hold interest rates pretty steady at about 2.75%.
Gotcha. Well, Graham, I had a question for you. With, over the, year to date, the international markets have really been outperforming the U.S. Do you see that continuing going into the U.S., to the summer months?
Yeah, I think we certainly could. I mean, we've had international markets really dramatically underperform the U.S. markets for decade plus or pretty close to that. So I think there's really good reason, since we're moving from a global, with all the tariff conversation and talks, to maybe a little more country-specific trade, if you might, or isolationist. And I think that can increase spending internationally. That goes into product purchases, which means, well, again, this is why we're seeing international markets outperform a little bit. I think we could easily see that because they underperformed for so long.
Gotcha. Well, Graham, we always appreciate the information and expertise, and thank you to our listeners. And I did want to mention we do have our 5th annual car show coming up here at the office on Saturday, June 14th. So not this coming up Saturday, but the following Saturday. So it'll be from 10 a.m. to 1 p.m. here at the office. So if you want more information about that, check out our website or call the office here, and we can get you signed up with one of your beautiful cars. And we'll talk to you soon.
Take care.